You have to look at it in both ways, not just on a dividend play, but also whether the company is growing. Siguro you should know also where the direction of the company will be headed. Kasi there are some sectors that have limited growth potential. Shift your funds to other companies that have siguro that has more potential to grow. I don't really advise investors to add more on companies that are expected to lose more money.
Hi everyone, in this video we have Lexter Azurin. He's a head of research for AB Capital, and he's gonna share to us his insights, his expertise on how you can spot bargains, or are we really cheap right now? So Lexter, how are you? How's the past 6 months treating you?
Hi, good day, Marvin, and thanks for having me here. It's a pleasure to be on your show, and yeah, I'm excited to do this. And yeah, actually, for the past few months, we've just been working from home, and so everything's remote right now. So yeah, so everyone. I hope everyone's safe, especially for the viewers. I hope everyone's safe and having a good day. This quiet day in the market.
Super quiet with the exception of now and Dito. But here's a very, very interesting question. You're known as a fundamental analyst. And since we're talking about stock bargains, I want to set the platform first and the context to all of this. For people who are new to the market, how do you actually say that a stock or the market as a whole can be considered as a bargain?
For the market right now, as you know, the market has declined significantly, especially for this year. Everything actually from the highs, I think we're down about 35% from the highs. Year to date, we're down about 20%. So everyone thinks that the market is very cheap right now. Although, of course, there's an underlying reason why our market is also declining. And of course, we all know the story this year is the COVID. So right now, the market is trading at around 17 times PE. So basically, that tells you that in relation to the region, we're actually not as cheap, given that the region is about 14 times. So ever since the fund managers, global fund managers have been pricing the Philippines a premium to the region, although that changed over the past few quarters. Basically, the stock market is a very long game. If you're betting for a recovery in 2021, it's actually the perfect time to accumulate actually select stocks. Or if you don't know any specific stocks, you can actually just buy the index if you actually take that into consideration. So our market is only trading at 13 times, so based on the 2021 estimates.
You mentioned that the Philippines is considered to be relatively expensive. Pero for the past years kasi, the whole world were okay buying us at a more expensive price because there was an expectation of growth. Now, with a lot of the companies, parang the difference between the Philippine markets and the US markets is we don't have a lot of tech, or we don't have a lot of medicine-related pharma stocks, which is what's pushing other markets higher. Given that we're higher, and then there could be a recovery, it could be at 13 times next year, but is that compelling enough to bring people back to the table?
Yeah, you're right with that, Marvin. No? Kasi if you look at the index, actually the heavyweights are, let's say with the likes of SM Prime, so Ali, so those are like the malls. So again, those are the heavily hit sectors, especially for the Philippines. And that's one of the reasons why the Philippine market is lagging. But I'm a half glass full person, so I'm very optimistic that eventually the market will bounce back. And history will tell you, even if you compare the data during the Asian financial crisis, global financial crisis, the market will always recover. Investors will always take advantage. When stock prices are going down, there's always that person who will take advantage of that bargain. It's only a question of when recovery, and of course, eventually this pandemic will be over.
People use PE as a way for them to benchmark if a stock is cheap. For people who are watching this, what would be a signal for you looking at the PE that it would be a good time? Do you have like a specific number? Once it hits this, somewhere around this mark, mura na siya? Or do you reference it from its range? Di ba may highest, lowest range din yan? Or Do you compare it with specific companies? What would be a practical approach, especially for retailers, especially that the access to data, it's not as mas madami kayong data compared sa amin also. So something like that. What would you tell people?
If you want to look at the market as a whole, so you look at the PE of the PSEI. But of course, if you're comparing, let's say, for example, a certain company, so syempre you have to compare it with, of course, apples and apples. So you can compare the PE of, let's say, SM Prime or Ali with the PE, for example, of BDO. So syempre, it's a different sector. So as analysts, we medyo sort of gauge already what was the historical average, what used to be the historical average PE of the market. Because you should remember that there are companies that have been trading maybe 20, 30, 40 times PE for the longest time, pero hindi naman talaga bumabagsak. And of course, there are some companies that are trading at single-digit level.
Hindi umakyat.
Essentially, hindi umakyat, diba? So, I think that's where the homework comes in. Kahit siguro get a few names in your basket. Let's say, for example, if you want to get into banks, then with the limited data also, I think it's fine to look at the first half results and siguro you can annualize it. So that will give you a sense what the company will make for the full year. Normally, yung ibang sectors naman wala naman seasonality. So it's okay to annualize. So when you say annualize, let's say for example, if you made 1 billion this quarter and another 1 billion second quarter. So you can say na parang wala naman seasonality. So I think it's safe to assume na by the end of the year, you would make this much.
4 billion.
4 billion. So, at least in that exercise, you can already gauge what the company will make by that time. If you want to actually do the nitty-gritty, so you compare company A to company B to company C, at least you can gauge whether the company is cheap or not. There are underlying reasons why a company is expensive and a company can be cheap.
If they will rank it, what should be more important for them? Their PE up against companies in the same sector or the historical PE? Because the reason why I'm asking that is, with the exception of maybe property and banking stocks, yun talaga madami kang comparison, pero yung other for example, Surpass, walang comparison yung Surpass. Some companies don't have a lot of peers that are also listed. What's your preference? And sa mga options na wala ka masyadong comparison, what do you do?
You look into other markets. For example, Surpass to Amazon, for example. Kasi syempre, Amazon naman is a huge company relative to a Philippine-listed one. But siguro maybe you can take a look at other companies in the regions. And then maybe just gauge also. Because I believe those figures are also available. So siguro you just have to maybe do a little extra work for that, especially if you're looking at other markets. And then also try to gauge also if it's in the same scale. So medyo tier 2 ba to, tier 1. So ito medyo malaki, ito medyo maliit. Pero siguro since mas mabilis mag-grow yung earnings nito, baka pwede kong lagyan ng konting premium naman. Yan.
You mentioned that you can start to compute yung earnings ng company and you can start to analyze it. Given that yung first quarter tsaka second quarter disclosures ng earnings, either the companies lost money or mababa talaga yung earnings nila, what do you suggest? What can people do to project right now na given that masama yung figures ng first half of the year, what could be an approach for that?
Given the assumption, let's say for example, lockdown ng 1 month and then eventually it got extended to 2 months, 3 months. So teka muna, parang 1 quarter na yung nawala. So that's basically 1/4 already of the year. So parang 1 quarter na yung nawala sa'yo. And then, teka muna, yung third quarter pala medyo gradual lang. So that's the time you medyo do adjustments na, teka muna, zero. So basically, zero sila nung second quarter. And then hindi naman malakas pa masyado yung third quarter. So that's where you siguro get medyo a good grasp also. Backtracking naman pwede. So let's say for example, you can actually apply this to historical data. So 2019, 2018, especially if you have a longer time frame. Kung yung normalized naman, normalized earnings niya. Let's say for example, for the past few years, ganito yung figure na nire-report niya per quarter, and then ganito yung growth niya for the past few quarters. Let's say for example, okay, yung average growth niya pala for the past few quarters was 10 to 15%. So at least in that case, you can actually get a good idea na on what will be the quarters coming ahead. Well, even us analysts, it's actually very challenging also for us. Kasi, I mean, 2020 is an unprecedented year for everyone. And of course, this is a lot different from what it was the past several years.
As we're talking about cheap stocks, though, you mentioned about PE. What are other parameters that people can look at aside from the PE ratio to determine that it's also cheap? By the way, guys, no, gusto ko lang to sabihin, please don't make a cheap company your only parameter. It's very very important na kumikita rin siya kasi it doesn't matter kung sobrang mura siya if it's barely earning anything, it's not worth also buying. So but aside from PE, any other suggestions that people can look at?
Ideally, what we use also is price to book ratio. So yun. So right now, actually, most of the banks are trading below book value. Say, for example, for the likes of Security Bank, even I think BPI also traded slightly below book value at some point. Metro Bank is trading at a 50% discount to its book value.
I
I think PNB is also 0.3 times price to book. Ideally, you want to compare it not just to the industry average, but also to its historical average. Kasi, as mentioned earlier, a stock can be cheap forever for the longest time cheap talaga.
In terms of preference or ranking, you prioritize PE more or you prioritize PB more? And what I've noticed also is PB is used more for banks altogether, no? And then PE is what I've seen, parang it's used for everything.
Actually, when you do your your discounted cash flows, so usually you'll arrive at a certain equity value, so net asset value. So, pero as a beginner, I guess for our viewers, siguro medyo mas ideal to use first the PE ratio. Aside from PE and PB, we also look at the ROEs of the companies, the margins, whether it's increasing or not, dividend yield, so whether the company is paying cash dividends. Kasi it's important also for the investors to know, syempre yung ability of the company to pay dividends. Kasi the fact that the company can pay sustainable dividends for the successive years tells you that the company is sustainable in terms of cash flows. They can afford to pay off and reward also the shareholders. And of course, that's also beneficial. It's not just for retail investors, but for foreign fund managers, whether it may be big or small. The fact that the company has the ability to reward its shareholders, then of course, definitely that's a plus also.
If you're in the shoe of a person who has Shell or Cebu Pacific who slashed their dividends, what should be going through your mind right now? And what should be your course of action?
For Shell, kasi it's a very challenging year for them. The margins for not just for Shell, but even for the industry as a whole, so the oil retailers, the margins are very small since Petron and Shell here only imports oil abroad. So whatever price they bought it here, they're just gonna resell it to the consumers. Siguro you have to look at it in both ways, not just on a dividend play, but also whether the company is growing. Siguro you should know also where the direction of the company will be headed. Kasi there are some sectors that have limited growth potential. Shift your funds to other companies that have siguro that has more potential to grow.
Follow up on that. When you say shift your money, you're talking about fresh funds to deploy on another stock or current position mo, unti-unti you start removing it there and then transfer it into something that can give you upside?
It really depends on your time horizon. I don't really advise investors to add more on companies that are expected to lose more money. Marami rin reasons why a stock is going down. It can be temporary, it can be structural. Try to find out whether kung structural ba yung problem or temporary lang ba.
People always say, buy companies with strong balance sheet. For people who hear that and are watching this, and then, syempre, iba-iba yung cash position ng mga companies is there a way that people can benchmark it na this is okay already, they will be able to withstand whatever is happening? What are the things that at least they could look for?
We're gonna go back to the cash flows na naman. So, when you say kasi strong balance sheet, It's basically the ability of the company to basically to pay off their obligations. So syempre, it's like putting up a business eh. So hindi naman pwedeng lahat inutang mo. On a business perspective, so ideally dapat may certain mix yan eh. So it can't be all debt, it can't be all equity. So this is the time where you actually look into the debt to equity of the company, liquidity of ratio. So whether they have the capability to pay off their debt, it will all depend on the cash flow, kung paano ba umiikot yung pera sa company.
Ito personal question ko na lang to. Ano yung tinitignan mo? Yung total debt to equity ratio or yung long-term debt to equity ratio? Sometimes kasi I disregard na yung short-term kasi feeling ko mababayaran nila kagad yun. Pero I'm just curious on what your preference is.
Well, for me, I use the total debt. Total debt. So yun na yung DE mo. At least in that scenario, you can get a bigger picture eh.
SMC, sobrang tagal na niyan. Ang taas ng debt to equity ratio niya. Pero they're considered one of the better companies in the Philippines. How do you put that in its context also?
It's important to know also to study what the business is all about eh. Kasi baka mamaya naman mabilis talaga yung turnover ng ng mga businesses. It's faster turnaround in terms of your cash flows. Company can be highly leveraged pero sustainable naman. So again, there's no really optimal ideal debt to equity level. So mamaya kasi sustainable naman pala yung 2 times debt. Especially it really varies on the sector eh. So yun nga yung ability for you to get your money back. Whether how significant you generate in terms of profitability.
What's so different right now though is companies are actually borrowing more because interest rates are lower. Labas sila ng labas ng bonds. Ngayon, so
yes,
parang they're doing actually the opposite. Hiram pa sila ng hiram.
They have the capability eh. Kasi given the scale also of the company, kaya nila eh. It's not just interest rates are low. In fact, this is actually a record low interest rates already.
Super.
Diba, you'd want to take advantage of the rates right now. Meron din mga certain companies that exercise already yung preferred shares nila. Kasi baka mamaya yung preferred shares pala nila at that time.
Nasaktan ako dun eh. Sobrang.
You have to look at both perspectives eh. Siyempre, you as an investor, you want higher yield for your preferreds or your bonds. That's why we're seeing a lot of capital raising now. We're seeing a lot of bond issuance, essentially taking advantage of the low interest rates.
What do you advise people who bought stocks that were cheap before pero hindi pa rin sila gumagalaw? What should be their plan of action? Assuming that while the company is cheap, maganda naman yung fundamentals niya, earnings are there, the prospects are there, hindi lang talaga siya binibili. How long should they wait? What should they do while they're waiting?
You might want to reevaluate your holdings right now. Especially that, of course, we're seeing a transition also. And siguro to reallocate some of your funds to other outperforming sectors.
If you will try to put a section, ito leading, ito lagging, sino yung mga sectors na lalagay mo sa leading, sino yung mga sectors na lalagay mo sa lagging? It's from a 2-year horizon.
Usually naman when the economy picks up, ang nauuna dyan talaga banks, properties, yun talaga. So, of course, especially now that prices are depressed, those are actually two good indicators. It's important to note also companies that medyo nabugbog na talaga but has the potential to recover. It's important to go back to your basics eh. So basically, what are the pillars of the economy? So given that the Philippines is more domestically driven, so maybe I should look at consumer companies, or siguro magre-recover yung eventually, pag nawala yung pandemic, maybe I should look into the tourism sector to basically identify sectors that will outperform, not just in the next few months, but in the next few years.
For example, 25 years old, and my time horizon is mag-invest ako until 55 years old ako. I have 30 years. Do you suggest that beaten down naman na siya 30-year naman yung time horizon niyan. As long as the fundamentals are good, do you recommend that okay na yun, or should they be more sensitive still that baka may chance pa siyang bumaba over the next few months?
I guess if you're looking at a 20-year horizon, that's a very long time. I think yung waiting for a few months or a few quarters is medyo irrelevant especially if you're looking at that time frame. Some of us medyo limited rin yung capital. So I think it's important to allocate some of your excess cash parate and invest, whether it may be bonds, whether it may be stocks. You have to have the vision as well, which industries will survive.
Words of encouragement for people who have lost money in this era, or at least over the past months.
In fact, when I entered the industry, was in the peak of the 2008 global financial crisis. So imagine I was going to the office every day, bumabagsak yung market, down ng 3%, down. Tapos the next day, bottom na yan. Yung pala, down pa pala ng 5%, down ng 10%, down ng 15%. Pero over time, that was actually the start of the bull market. So imagine when I entered the market, roughly that was around 4,000, 3,000. And then, so na-experience ko yung bankruptcy ng Lehman. So at the time, yung index umabot ng 17.
17, 18. Yeah.
17, 18. Actually, 1745 to be to be exact. And look at the index look at where the index is right now. So even with the pandemic, we're still at 5,000. So the market will always be there. It's a question of whether you will be there. People should also know the difference between trading and investing. Kasi iba yung investing sa trading. That's a very huge difference.
I hope you guys got a lot from this. And what's so interesting about that is there's so many things to look at when you start investing. Pero kailangan nyo talaga pag-aralan yun. Because if not naman, I think index funds will also work if you just want exposure. So thank you so much, Dexter Asurin, AP Capital. But now, eto na, inabangan ng mga tao, fast stock. Warren Buffett, Ray Dalio.
Warren Buffett.
Preferred shares, bonds.
Preferred shares.
Jollibee Max Pizza.
Jollibee.
Dividends or growth?
Growth.
Cut 5 million pesos or hold on to 5 million peso loss?
Hold on to 5 million pesos.
L-shape, U-shape reversal.
Swoosh.
Technicals or fundamentals?
Fundamentals.
Cheap stock, growth stock.
Growth stock.
PLDT Globe dito.
Globe.
Dito now.
Dito.
Growth area, BGC Makati.
BGC.
Manila Water MPI.
Manila Water.
Peso cost averaging, buy and hold.
Peso cost averaging.
10 million pesos earning 10% or 1 million pesos earning 100%.
10 million pesos.
Thank you so much, Lecturer Asurin. I hope you enjoyed this also. To everyone watching, God bless you all and trade well, trade strong, trade smart.